Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the markets ahead of this very big trading week ahead of us as we do get the FOMC interest rate decision where the Federal Reserve is expected to announce the first interest rate cut of this new cutting cycle. But before we get started, anyone who's interested in joining my trading team, what does this mean? This means receiving my trading signals as well as my macro research regarding whichever positions I have open at that particular time ahead of the US market opening on a daily basis. To make sure you visit my website, dailymarketmovements.com. I currently have over 100 people that follow my trades, and by the end of next year, I'm hoping that this number will be north of 1,000. So www.dailymarketmovements.com. The website link is in the description of today's YouTube video. I charge a very small fee of $29 to sign up. But let's get started here with today's video. S&P 500 trading at around 5,616 after last Friday's surge to a new monthly high. Now, what's interesting here is that we're trading within this triangle pattern. Resistance is just above at around 5,650. I do expect that it is possible to continue the upside movement here as we go into the FOMC meeting, which is on Wednesday, which only gives us around 35 points more upside until we do hit that area of resistance. To the downside, we have support at 50-day EMA if we were to get rejected and move lower. That sits around 5,555. Below that, we have the 200-day EMA at 5,524. So just to make things simple, between now and Wednesday, we could do anything like this. But ultimately, after Wednesday's interest rate decision, that's when we are expected to maybe get a breakout where we go like this or that. Obviously, a breakdown then sends us back down towards the supportive areas at around 5,400, where a breakout takes us automatically back to the all-time highs there at around 5,672, where if we broke above that, then of course 5,700 comes into play. So very important week for the markets. But just a quick one before we continue today's video. This is what the economic calendar looks like in terms of, let me just go back. If we go this week, in terms of economic data this week, it doesn't really kick off until tomorrow, where we get core retail sales as well as the retail sales figure. This obviously is going to be the last major bit of data that we get ahead of the FOMC meeting, but I don't think there's too much in the retail sales that can change the Fed's mind. I think that whatever they think they're going to do, whether it be a 25 basis point cut or a 50 basis point cut, I do believe that the majority of them would have chosen what they want to go for by now, and that they're not going to let the core retail sales figure sway their mind much. But of course, Wednesday sets up for the big day. The Fed interest rate decision expected to come in at 5.25% from 5.5. So currently a 0.25 basis point cut is priced in. But what's really interesting is that if we bring up the CME interest rate Fed watch, I'll just show you what is expected. This is what the market is expected as we go into September. Now there's a 63% chance that we're going to get a 50 basis point cut. That is significant. Prior to today, it was the 25 basis point cut, which was the most favorite, but that has now flipped. I will say it again, we have a 63% chance of it being a 50 basis point cut. So I think that seeing that retail sales figure tomorrow is going to be really interesting to see how that changes the CME outlook. But of course, on Thursday we also have some very important data, and that being the initial jobless claims. Normally this data point isn't all that important, but at this moment in time, with all eyes on the labour market, it does have a significant amount of importance to it. So 232 expected. But let's just go back to the markets here. Let's have a look at the Nasdaq 100. Nasdaq has hit resistance. We've now been rejected so far today, down around 0.75%. This is due to stocks like Micron, for example, down 6% on the day, which is obviously weighing on the Nasdaq 100. But again, from now until the FOMC decision on Wednesday, I don't expect the markets to do much. We could go and revisit the 250-day EMA here on the 4-hour chart, but ultimately we're going to probably pressure the top side of this wedge before we choose whether we want to break out towards the upside or the downside after Wednesday's Fed interest rate decision. Looking at the Dow Jones 30, a brand new all-time high has been achieved here early on during this trading week, 41,600. This is just due to the fact it hasn't got large exposures to technology. I was just showing you over with the Nasdaq 100, we're trading in the red today, where the Dow is actually trading in the green at an all-time high, and this is largely due to the fact it doesn't have a large exposure to technology, and we're seeing some of the financial names rebound. Other markets, it's the dollar. The dollar hit a new low earlier on today. It does look like this is destined to go lower. I've been saying for some time 97 is my target here for the US dollar. That of course aids US equity prices moving higher. Also, we have the TNX that continues to move lows. along with the US dollar. So obviously that's all positive for US equity prices. And finally, just to wrap up today's video, I want to focus on Bitcoin. Bitcoin trading at 58,176, which is frustrating because late last night on Sunday over the weekend, obviously we did manage to rally as high as 60,603. We flipped the 250-day EMA, but we've now broken back below it. We might just be testing for some confirmation of support before we do continue trading higher. Look, we're in September. September is known for historically being one of the weakest months in terms of historical performance for cryptocurrencies like Bitcoin, but this changes dramatically as we enter Q4. Obviously, Q4 is just over 2 weeks away. I think it's 2 weeks and 1 day from now. Where we enter into October, November, and December, which historically is the most bullish period of the year for Bitcoin. So I'm really, really excited for Bitcoin. As I've mentioned in previous videos, team, the majority of my Signal team that follow me, we have positions open in Bitcoin and Bitcoin proxies, such as the miners and a few other Bitcoin proxies as well. So yeah, just wrap up today's video, guys. Don't forget, if any of you would like to participate in the trades that I have open at present, then make sure you visit my website, dailymarketmovements.com. I've left the website link in the description of today's YouTube video, and for a very small fee of $29 you could gain access to all of this and copy my trades and hopefully make that money back and more. But thank you very much, and I'll see you guys all tomorrow.